Ladies and gentlemen, welcome to the August Festival of Traders Day. Thanks so much for the introduction. I really appreciate it. I want to give a giant shout out to just having the opportunity to present next to Art Collins and John Clayberg. Ladies and gentlemen, thank you so much for being here on this fine, terrific Wednesday afternoon. Alex, Alan, Bob, Brad, Dale, Dennis, Eddie, Gabriel, Hector, James, Joe, Kenneth Freeman in the house, Mark Mann, Michael Huberman, good to see you. Here again is my disclaimer. I'm not particularly using a slideshow today for no other reasons other than I just like to use charts to explain my tradings because I figure that's kind of the way I learned, so maybe that's the way you guys learn as well. Mr. Singh, how are you? Richard Hanfield, type in a 1 if you guys can hear me okay. The last time I got a chance to present with Dave was back in March, and I was actually broadcasting remotely, had like a kind of an interesting family emergency, so I had all kinds of stuff going on. So I'm really, really excited to actually have my full actual setup here. And we're going to be presenting today all sorts of topics. For me personally, I'm going to be discussing how using something called the Moving Average Convergence Divergence, romantically named the MACD, can help you spot swing trading opportunities based on divergences. So I actually have a trader. I don't know if this is the real name or not, but he's here. What's his name? Is Brad, last name MACD, Brad MACD. So Brad, I might be calling on you a few times on this because that's just an awesome last name. It ties in perfectly with what I'm talking about, so this is great. So let's discuss what divergence is, and let's talk about how it relates to the market. So the first and foremost thing I like to talk about in regards to a trend is what I anticipate stocks to do if they are trending. So if a stock is trending bullish, what do you guys think the stock should be doing? You guys have any guesses on that? If a stock is going bullish, if it's in a bullish trend, what should it be doing? It should be making higher highs and higher lows. Right? If the stock is making higher highs and higher lows, it is said to be in a bullish trend. And of course, if you are in a bearish trend, the stock is making lower highs and lower lows, right? So if we're looking at Alibaba, which is the stock on the chart right now, the stock right now that we're looking at on the chart, we had earnings today. Ladies and gentlemen, let's type in a 3. Let's get some keyboard activity. Type in a 3 if the stock that you're looking at right now, Alibaba, made a lower low today. I'm going to type in a 3 really quick because I think it did. You know, the stock gapped down, definitely made a lower low. And if we're looking at the most recent trade on Alibaba, you know, let's say from November 2014, we have a high, we have a high, we have a high, we have a high, we have a high. So we're actually making lower highs and we're also making lower lows on Alibaba. So my overall thought process then at this particular point in time is, in all honesty, Alibaba is kind of trending bearish. It's making lower lows and lower highs. So when you're looking for a trend, what we're going to be doing is we're going to determine based on the trend what it's doing. Is the stock making higher highs and higher lows, or is it making lower lows and lower highs? That's the easy part. The part where the divergence comes in is a little bit of experience and a little bit of indicators. Divergence to me is very similar to getting my oil changed in my car, right? If I'm driving down the road, everything is fine, and the little orange light comes on. You guys all know the orange light. I'm not a mechanic at all. That's actually blue, but you guys know what I'm talking about. The little orange light comes on that says maintenance required, or maybe it has that little oil symbol. You know something needs to be fixed, something needs to be changed, something is off just a little bit, right? So you can anticipate, okay, I need to get an oil change because you got a reminder. If I had to relate what divergence is, that's probably my best example of how I use divergence in my swing trades to determine if something is changing or if something is amiss, or better yet, the actual specific term is if the momentum is changing. Momentum. If the momentum of the stock is changing. So what I'm going to do here for just a moment is I'm actually going to pull up what I'm referring to is. It's called the MACD. It stands for Moving Average Convergence Divergence. And it's a very interesting little indicator. Here it is right here. So these lines, here's the settings that I use. I know that that's going to be coming in at some point. The moving average convergence divergence, just like it sounds, is based off of moving averages. So this particular moving average is, believe it or not, the 12, the 26, and you're basing a close on the 9. So the way that this particular indicator works is actually kind of cool. The moving average convergence divergence literally finds divergences. Think about it, if you will, again, as like your oil light indicator on the stock market or the stock that you're trading. It is helping you and letting you know if something is astray, something is amiss, or something is just a little off and maybe should be a warning signal for some traders. In a trade, as I mentioned, if you're a bearish or looking to go bearish, you want the stock to make lower lows and or you want the stock to make higher highs. What we do is we use the moving average convergence divergence, or I'll just start calling it from now on MACD, just because it's easier to say. We use MACD to determine what kind of divergences are going to take place. So for example, right here on Alibaba, we had a low. So here's the low on Alibaba. Well, notice if we take that low in conjunction with the low that MACD made. So here it is. Here is the low. If I draw the same exact arrow, there we go. So notice I'll draw in green. So here is the low on Alibaba, and here is the low on MACD. There is the low on MACD, and there is the low of the stock. So you can see the stock did actually make on this pivot a lower low. Would you guys agree? Type in a 1 if you can see that the stock, and I know that I'm using hindsight, but I'm using hindsight as an example to teach you what to look for, and then we're going to talk about future sight, right? So Jerry Cox says yes. Yeah, so the stock clearly made a lower low. That's the point. You want the stock to actually move, to make the higher high or to make a lower low, and you're going to be looking for the divergence. Now, the divergence, ironically enough, doesn't really shape up until you start getting some candles and some things like that shaping, bouncing and moving and the price action of the chart, right? Keep in mind, all indicators are built off of a price action. But again, just like the oil change light on your car doesn't drive your car for you, it just lets you know if there's going to be an issue under the hood, right? If there's something that needs to change. This signal on Alibaba was just a signal for me to slow down or to be much more neutral than just straight up bearish, because number one, it had just broken a all-time low. Here's the all-time low in Alibaba right there. That was the previous all-time low. So Alibaba had made a lower low. It was going bearish. So if we hop over and let's kind of really zoom in here and really just understand how this felt at the time, a lot of people were bearish on Alibaba. Right, so right about here, this $80.23 price support hadn't occurred yet, right? This is what Alibaba looked like at the time. So you got a lot of traders saying, okay, well, the stock is breaking the all-time low. You have a gap down, which, is a little bit bearish. You have a black candle. This looks pretty bearish. Alibaba looks like it's going lower. But if you hop over to MACD, you'll notice that the MACD was actually making a higher low, even though Alibaba was making a lower low. That, ladies and gentlemen, is called bullish divergence. Bullish divergence. And here's what bullish divergence really means. It means, hey, bearish traders, something here is probably changing a little bit. What's changing? The momentum. The momentum is changing. Something is beginning to shift. So keep in mind that does not mean that the stock has to go up strongly. When a stock is losing momentum, a stock can go either in a direction or it can go sideways. So the market itself can correct in price or in time. So what I mean by that is if you find a bullish divergence on the stock, so let's say the very next day you get this giant white candle on Alibaba. And you're saying to yourself, oh, okay, pretty strong, huge bullish candle. There is never a support there now, but I have a little bit of a bullish divergence. I think Alibaba could go bullish to sideways at this level. What do you guys think? Would that be beneficial to know, or to at least be able to create a trading plan that says, all right, based on the divergence, I'm going to draw a little bit of support here, and I think Alibaba could go bullish to sideways? I think it's very beneficial to know. Because if that's the case, right, you could start picking up some shares, buying low, selling high, doing put sales, bull put spreads, or just at least having a more bullish to neutral perspective. Now, here's what's even more interesting. Notice how long the divergence here in Alibaba hung out. Okay, so there it is. So you have the same support, and notice the entire time Alibaba was trading at this level, look what the moving average, the MACD did. The MACD continued to make higher lows. Continued to make higher lows. I think that's really interesting. Now, I'm not saying that this divergence, this bullish divergence, could have predicted this this earnings gap. In fact, the exact opposite, right? But at the same time, you could have had an understanding and a perspective based on some support and resistance and based on the MACD that the lower low or the relative low that the stock was making, the MACD was actually not confirming that low. Therefore, you would be bullish to neutral. Sarah's got the first question of the day. She goes, is the blue line or the orange line the actual MACD line? Well, the MACD itself, this is the indicator. Right, the whole thing is the indicator. So you're going to be using both lines. You're going to have the 12 and the 26 moving average. And the blue lines is going to be what's called the histogram. I actually don't use the blue lines that much, the histogram. But the histogram just simply helps you show the cross of the actual MACD or the moving average. So obviously, as a stock moves sideways, since this is based on moving averages, the moving average will also trade sideways. This is something called a non-range bound indicator. All right, so I'll write that down. Non-range bound. So there's no range that that MACD is using. It is a equilibrium indicator in the sense it comes back to the zero line at some point. So the longer the stock trades sideways, the more likely the stock will pull back to the actual zero line. So I think that's kind of cool. It's kind of interesting. So let's look at present day Alibaba and let's ask some questions present day on Alibaba. So this is not 3 years ago. This is not 3 days ago. This is about 3 minutes ago. Market just closed 12 minutes ago. Alibaba today has made a lower low. Notice that the MACD, as of right now, has not made a lower low. So I am in short-term suspect of this bearish trade. Meaning, if I had to make a guess of what could happen, I think that's why I have a little bit of a bracket trade on Alibaba. I think there's a really good chance that Alibaba could trade just a tad higher based on, again, that little short-term divergence. The fact that MACD has not made a lower low. In fact, it's made a relative low. And again, keyword, if Alibaba trades up, begins to roll over, we go in bearish right there, and MACD makes a lower low, type in a yes if you think that could be a good confirmation of a bearish trade. Rick Heath says, are you in listen mode only? Yes, sir. You're in listen mode only. You can still type in, but you're not able to talk. Mr. Shearhorn says yes. Anyone else other than Jeff? Mr. Cox says yes. I would think so. Yeah. That's the benefits of having a trading plan, right? If you trade the present, you're going to get emotional. If you trade the past, that helps you learn. Creating a plan for the future is what allows traders to make profit, or at least be profitable, or have the ability to be profitable, right? Creating a trading plan and trading the future. So let's do one other type of divergence, and we're going to look at some other charts, and I'm happy to pull up anything that you guys need to if you have a question on. But here's Apple, and we're going to check out Apple, and this is going to be really fun. I think you guys are going to like this. You're going to like this trade. So first and foremost, ladies and gentlemen, Apple has made a lower low right here, and it's made a lower low on MACD. Is that divergence, yes or no? And the answer is nope. No, it is not. It is not divergence. The stock made a lower low. MACD made a lower low. All right, everything looks fine. I'm kind of bearish on Apple at the moment, and whatever kind of pullbacks it gives us, I'm going to be looking to short, and my ultimate target is 106.16. But here's what's really cool. Notice this level right there on Apple. That was the all-time high from earnings on April 28th, 2015, when earnings came out, and by the way, just like Apple often does, had an amazing earnings and ended up trading down for the day. So if we're looking at that particular price, ladies and gentlemen, did Apple make a higher high, yes or no? And the answer is yes, it did. Even if it was just for a few minutes, it did make a higher high. right? That's the highest it's ever been. So the high of that candle on Apple was 134.54. This previous high was 133.60. So it did make higher highs. So at the time, Apple was making higher highs and higher lows. But notice what the MACD looked like. Look at this. Check this out. So stock was trading sideways. You had a high. You had a higher high, or what could also be referred to as a relative high. I'm okay with the same terminology. It doesn't matter. A higher high or a relative high. Either way, the stock moved to a similar location. What did the MACD do, ladies and gentlemen? What do you guys think? What did the MACD do? Any guess? Jeff said it went down. It did. It was way down. Way down. So in fact, you're looking at a relative high or a higher high on Apple, the actual stock itself, but then you have a lower high on the MACD. What would this be called, ladies and gentlemen? Vinny says that is divergence. Yes, that is divergence. What kind? Any guesses? Reg said it is bearish divergence. Yes, this is bearish divergence. So what I'm getting at is I'm not here to say by any means that I think Apple was, or thought Apple was going to go to zero at that particular level. I will say, however, that based on the divergence, based on that bearish candle as of the 28th of April, I had many bearish trade setups based on this analysis. Now, granted, I could use the analysis just with the candlesticks by themselves. But if you can factor in, if you can sprinkle in the fact that there's a little bit of bearish divergence out there, it just helps you add to the puzzle piece of saying, all right, on Apple, I'm at least bearish to neutral, meaning I expect this to occur. So from there, it's all dependent on you as to what kind of strategy you want to implement during the situation. Go ahead and type in what kind of strategies you could have implemented on Apple during that time. The ones that I did option spread. So I did something called a bear call spread. That's what I was doing on Apple, the 135, 136s. I was doing a lot of those on Apple because you had a lot of resistance up there. You had a divergence. Now, again, you could have shorted the stock there. And yes, you could have made some money depending on how, what your targets ended up being. But I think it's fascinating that Apple sold off from there once, twice, 3 times. Now we're back down to the support. Just absolutely just destroyed that support. Came up, retested it. We're making lower lows. MACD's making lower lows. I'm a little bit more bearish than bullish on Apple. I guess that's my analysis. Simon said you could have done Iron Condor. Yes, I actually did a few Iron Condors. I did indeed. Apple is probably my number one most traded stock. I mean, that's pretty much everyone loves trading Apple, right? I love trading Apple. It's a great stock. It's definitely probably my number one go-to. I try to trade it every day if I have the chance. I lost on it today. I had a little bit of a bearish bias on it today, and I think most people had a little bit of a bearish bias on the market today, and then there was just insane buying at some point. That's kind of interesting. Go ahead and throw out a few stocks at me if you don't mind. Go ahead and throw out. Michael said, was straight puts too risky? No, not too risky. As long as you understand how much you're risking and you can go into any trade understanding your risk, that's the key, my friend. That's the key. Abraham wants to look at XLU. All right, let's go check out XLU. See if we can find any divergence on XLU. Utility sector. A utility stock. All right, so I'm going to have to straighten this guy out just a little bit. There we go. Utility stock. All right, let's see if I can find a divergence and bearish divergence right there. So again, I'm not saying that I would have predicted that the utility stock would have fallen right there, but I can definitely say I would have. Now, I don't look at XLU almost ever, but I can simply say, looking at this chart, I would have said, all right, guys, there's some pretty strong bearish divergence here. If you're profitable, consider taking some profit off the table, or potentially buying some puts to protect yourself if you're in a bullish position long term, or whatever your strategy is. There is divergence, aka the oil light is coming on for the stock, and we might need to start slowing down. So as of right now, what are we going to do? short term? Well, short term, we actually had a lower low, and we had right here a low, and then we had a higher low over here. So I think there's actually some bullish divergence on that particular pattern for the utility sector. So if I had to come up with some analysis on the spot for XLU, I would say there's a pretty decently strong resistance around 44.20. We had a little bit of a bullish divergence. There's also some short-term resistance here. We'll likely pause for a little bit and then break out bullish or continue to be a little bit more bullish to neutral. That'd be my analysis on XLU, purely based on the MACD and the divergence. Oh man, a lot of you guys are writing in. Now you're super pumped. I got tons out here. Skyworks Solutions. Let's go check out that one. Skyworks Solutions. So on Skyworks I'm actually a little bit bearish on at the moment specifically. And let's look at some divergence here on Skyworks Solutions, and let's just check out the chart and we'll see what we can find. So right here was probably the most obvious of the divergences. So you had actually kind of 2 or 3 divergences. So here was a high. Everything is fine. Stock is trading up. Boom, 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 boom. Stock makes a higher high. Everyone's happy. Everyone's likely bullish. And then notice MACD, a lower high. So you're thinking to yourself, oh, okay, maybe the trend is in suspect. Right? Maybe the trend is on suspect. So this trend has a little bit of a sell-off, right? The momentum begins to wane. Stock trades higher, trades into the resistance again, and notice again a lower high. So this would have been in my personal opinion, a great place to consider doing something, protecting yourself in some form or fashion, maybe or potentially either buying protective puts, doing a collar, exiting your profitable trade, whatever it might be. There was some definite divergence, in my opinion, out there on Skyworks Solutions not too long ago. So right now, as it stands, I am a little bit bearish on Skyworks Solutions. It looks like a little bit of a pennant pattern is forming. We are indeed below the exponential moving averages. I figure I just might as well bring this up here while we're at it. And my anticipation is that we trade into the moving averages, we bang our head, and then potentially roll over on Skyworks Solutions. Also kind of looks like a head and shoulders pattern of sorts. This is the neckline, and we're retesting it right now. So if it continues to go down, I'd be okay. Kenneth Freeman says, can MACD work on intraday charts? Yes, it can. You're going to need much faster moving averages, though. So instead of the 12 and the 26 and the 9, you're probably going to be looking at like the 3, the 8, and the 2, or the 3, 8, and the 5. Bottom line, I don't personally use MACD on day trading. I look at almost just candles and moving averages when I day trade. But for swing trading, I absolutely like to consider MACD in my analysis. GW says, aren't you looking only at the moving averages in the MACD to look for divergences? Aren't you looking only at the moving averages? Well, the MACD is built off of moving averages, yes. It is built off of moving averages. So again, it's the moving average, stands for moving average convergence divergence. So you are looking at the moving averages specifically, but the indicator itself, you're helping to see the momentum of the stock with that particular indicator. Because even though you're looking at the moving average, if you looked at the 12 and the 26 moving average by itself, right, the 12 and the 26 would be over here, but the MACD, the way the indicator works, the actual divergence, you have a lower high there on Skyworks Solutions. So you would have, again, that understanding of that interesting perspective to be a little bit more bearish than bullish. Michael said, before taking your positions, do you do the same analysis on the larger general markets? You mean regarding like SPY, DIA, that kind of thing, Michael? Not specifically, no. I always look at the long-term, the general stocks. I always look at the SPY pretty much every day. I look at the SPY, the DIA, all that kind of good stuff. But I don't personally dictate, okay, is the SPY moving in one direction? And if not, I'm not going to take that trade. Because honestly, the general market has been sideways, really, for the last year, almost year and some change. So, yeah, that's really about it. So, ladies and gentlemen, this has been 25 minutes of gloriousness. Do you guys have any questions for me at all? What I want to do is sit here and answer some of your questions. I have a little bit of time for questions. I want to make sure I give plenty of time for the next presenter. You guys are going to love him. But in this particular situation, I would simply like to let you know Dave's going to send out a link if you guys are interested. I use this charting software. It's called TradingView. And if you want to use it, it's a great charting software. It is free. And I do post my analysis. I probably post 5 or 6 charts a day. So if you want to get 5 or 6 charts with my analysis for free, there's no cost. Just hop over to tradingview.com. You can follow me, Real Life Trading, and also Dave thankfully just sent out the link. You can find my profile on TradingView, and there's also a YouTube video that Dave sent that you can just figure out how to follow me if you have any questions on TradingView. And again, it's free. I mean, I don't. I post all my analysis. If I'm looking at a trade, I post my entry, my stop, my targets, the why, what I'm thinking, and you guys can reply to me. I'll reply to you. You can see right here, someone just signed up. So I have access to this account. I can chat with you. There's my private messages. That's all. It's just a really cool charting software feature. Win says, can you show us how to do a bear call spread? I can. Hop over to my YouTube channel. Real Life Trading, youtube.com, Real Life Trading, Win, and type in credit spreads. But I'm not going to be able to do it in today's session. Not enough time. Simon says, what other things can MACD do? I personally use it for just divergence. Some people use it for buy and sell signals. So again, looking at the cross, right? So when the blue line, so when the 12 crosses the 26, it gives you a buy signal. When bullish, when the 12 crosses 26 bearish, it gives you a sell signal. That's also what it can be used for. I don't personally use it for that reason, though. Miss Bebe Newer says, would you be doing a recording? Yes, Dave will be taking care of all that because he's an absolute rock star. Michael said, thanks very much. I'll sign up. Cool. It's free. It's easy. Just follow the 2 links in the chat pane and hop over to TradingView. And again, that's all, guys. You know me. A lot of people are familiar with what we do at Real Life Trading. I just simply trade and like to teach people, educating them. And like I said, I've known Dave for a long time. He's a great guy. You guys are going to absolutely love the presentations brought to you by both John and Art this afternoon. So make sure to stick around for that. Dave, do you have any questions for me? Or are we good to go, brother?
We're good to go. So looks like we're out of questions. So of course we want to thank Jerremy for joining us. Again, you can find him at reallifetrading.com. Again, I sent out the link there to join him at TradingView. So I want to thank Jerremy for joining us, and we're going to get set up with our next speaker.